Welcome to Idea to IPO. Hello, my name is Rob. I organize Idea to IPO. We've been doing events in Silicon Valley for many years. We launched officially on February 1st, 2010. At that time, we had no members and no events on our calendar. At this stage, we have over 400,000 members among all our meetup groups all around the world. We've organized, promoted, and produced over 3,900 events. By any standard, by any measure, we're the most active, most prolific startup event organization in the history of Silicon Valley, bar none. Thank you. Well, thank you for your support all these years. We hold venture capital panels, legal workshops, networking events, and more. We hold an event nearly every day of the week. Check out our schedule at ideatoipo.com. Our mission is to promote entrepreneurship, support entrepreneurs, build community, and provide value in the Silicon Valley startup ecosystem. To that end, we provide content that's practical, actionable, and relevant, stuff you can actually use to succeed as entrepreneurs. We believe in building community because Silicon Valley is a global aspirational ecosystem. It attracts people from all over the world who come here to do great things. Who here is not originally from Silicon Valley or the greater San Francisco Bay Area? Who here was born and raised in Silicon Valley or the greater San Francisco Bay Area? Well, 5 of you. Well, thank you. Well, welcome. Well, welcome, natives. So whether you were born and raised here or just arrived last night, it's important for us to provide multiple channels for you to meet people, build relationships, and grow your network. With regard to value, we want to make sure that we provide value at each and every one of our events. Not just value for your money, which is important, so we make sure our events are affordable. And if you cannot afford to cover charge for whatever reason, come talk to me and we can work something out. More importantly, though, at each and every one of our events, we make sure that we provide value for your time, which is your most valuable resource. Anyone here getting any younger, besides our moderator and maybe our panel? So when you invest your valuable time to come to our events, we want to make sure that you maximize your ROI. We have many partners that help us do what we do: law firms, venture capital firms, angel investor groups, incubators, accelerators, colleges, universities, and lots of other players in the Silicon Valley startup ecosystem. Tonight, we're grateful to Perkins Coie for hosting us at this beautiful venue in beautiful Palo Alto. Is this a beautiful venue? So let's hear it for Perkins Coie. A few of our other partners are here tonight. I would like to have them say a few words. Let's hear it for Ken and Cordify. Applause.
Thanks, Rob. Good evening, everyone. My name is Ken Morris. I'm founder of Cordify. We do software development for startups. As Rob said, time is of essence. We've helped almost 35 to 40 startups go from ideation to MVP. And we work with them. Whoever actually wants to go beyond that, we do work for them as well. We also actually work with early stage startups who don't have a founder CTO or a founder CPO. We actually provide fractional services, fractional CTO and fractional CPO services. So anyone who's interested in talking to me, come over there. Have a good evening.
All right, next up we have Wallace from Metis. Applause.
Great, thanks, Rob. This is the most consistent guy in Silicon Valley. That said, I'm Wallace from Metis. I own a real estate brokerage. Some of my team is here. If you have any real estate questions regarding buying, purchasing, or leasing, commercial or personal, we're here to help. Thanks for coming out tonight.
All right, so here's the schedule for the rest of the evening. Our panel will hold a brilliant, compelling, dynamic, entertaining, and scintillating discussion, right? Yeah, we have high standards here at Idea to IPO. Then at 8 p.m., we'll open it up to audience questions. That'll take us to 8:30 p.m. At that point, we'll end the program. Stick around, network, socialize, connect. As a courtesy to Perkins Coie, we'd like to leave the building by 9 p.m. However, there will be an after party. Here are the possibilities. The Rosewood. I know it's Wednesday. The patio, and Pizza My Heart. So more on that later. So without further ado, I'm going to hand it off to our distinguished moderator, Arman Pahlavan, partner here at Perkins Coie. So let's give it up for Arman and our panel. Applause.
Thank you so much, Rob. Can you guys hear me? Is the mic working? Okay, we're good. Rob is in show business, apparently. This is really not idea to IPO, but what a great event he puts together. I've been doing this with Rob for several years, pre-COVID. We did this quite a few times. And, you know, one of the great things about Silicon Valley, and I know we have some newcomers to Silicon Valley. I think Camila is a newcomer from Munich, is this ecosystem. And this is something that you really have to be so proud of, since I am very proud of it, but that the fact that somehow Rob can put together 100 people in a room over my asking him to do this, you know, a couple of 3 weeks ago, with some really fabulous panelists from, you know, on a very, very fabulous topic that Al Gore commercialized. You may remember this, but this was the joke of town when he was talking about climate tech and the changes in climate, and everybody was laughing at him. So with that, my hat's off to you, Rob, for doing such a fabulous job. Maybe so you guys can fact check this. I'm not sure if it's true or false, but we probably are the firm that has the most number of patent applications on file in the climate tech field. So we are deep into the throes of climate tech. We think it's a huge, huge opportunity. It started many years ago, and I think this is, if I may, Ephraim, you were with me a few years back, but I think we were talking about this is climate tech 2.0 because it started in 2005 and it failed miserably, and then we're back at it again, and we're not going to give up till we succeed. So thank you for coming. With that, I would love to present the panelists, who are amazing folks that are doing work in the climate tech. So Zoe, please say a few words about yourself.
How was that? Yep, you can hear me. Hi, I'm Zoe Samuel. I work at Starshot Capital. We are on our first fund. We just raised $32 million, and we're primarily focused on seed and Series A stage companies in the built environment, the industrial sector, and the food and ag and land use areas. I was previously at Google, where I co-created Anthropocene, which is Google's largest grassroots climate community, where we supported over 40 projects using Google's famous 20% time, where they let you use 8 hours a week. Well, it's really 120% time to start a project, and we supported a number of projects that have been launched all over the world. We were very emphatic about the fact that a third of Anthropocene's leadership is based in and from the global south. And so some of our sort of most proud projects, in India and places like that, where we tried to emphasize that, America is not the world. And so I'm very happy to be here I'd like to think everyone here who's been in climate, if you were in climate before sort of 2020, you're in the people who were cooling the planet before it was cool. And thank you for, being part of that.
Wonderful. Osama, if you could please say a few words about yourself and your fund.
Hello, everyone. I'm Osama. I work at EDF, not the Environmental Defense Fund. It's Electricité de France, so the French electric utility. I'm originally from Egypt. At EDF, we do a bunch of different things, mostly in France, UK, Italy, and Belgium, but a bunch of activities here in the US as well. We're very proud that I think 90% of our energy is clean, mostly renewable and mostly nuclear, renewable, and hydro. So we're very proud of that. And yes, we do corporate VC here in the Bay Area, mostly investing in Series A and B. Very broad definition of climate. Really focused, though, on synergies with our business activities. So we're a very strategic investor from that perspective. Happy to be here and great to meet everyone, and hope to talk and answer questions and all of that good stuff.
Wonderful. Please. Camila.
Hey, everyone. So I am Camila. I started my career actually in cloud software business in NetApp, which is a Silicon Valley company, but when I was in Munich. Then I transferred between departments and found myself in the startup ecosystem in fundraising and being a revenue manager, a SaaS software startup in Munich. to then entering the VC world and co-funding a VC in the SaaS and software ecosystem, to then actually realize that I wanted to move to the cool side, to the cool kids, and joined and co-founded Climate Tech Fund for a family office, Pfeiffer Holding Group. So we invest in everything in the value chain of wood, so construction, material sciences, industrial technologies, everything hardware, everything sweet. And yeah, very happy to be in the Valley. I'm new in the Valley, and I'm very excited to see the new entrepreneurs and my co-panelists. And yeah, happy to be here.
Great. Thank you, Ephraim, my old friend.
Yes, definitely.
Pre-pandemic.
So my name is Ephraim Lindenbaum, and I'm a recovering entrepreneur. So I started on your side of the table and eventually worked my way to this side of the table here. But seriously, I started company here in Silicon Valley, grew that company, exited that company, and it's somewhat binary. You either start another company or become a VC. I didn't have any good ideas, so I had to do the venture thing. So essentially co-founded Advanced Ventures in 1999, so we've been doing this a really long time. As Arman said, we were in the first wave of clean tech. We were also in the first wave of AI. We got exits in both. We thought it was done. We were really happy, and then it all crashed out. So, anybody who was from the first wave of clean tech, congratulations that you're still here. However, we've continued on that path. We invest across areas like technology, health, and wellness. In our case, that involves things like climate tech, clean tech, food tech, plant-based proteins, things like that as well. We're back in this category in a big way because we feel that it's essential for both the world, but also from a technology standpoint, it's really moved along. So we're now seeing things that, were initiated 10, 15 years ago coming to fruition. The tech is now there. And we've seen that in other categories. So this is a great time to be an entrepreneur in this category. There's a ton of money going into it. The data just suggests that this may be the largest financing period in climate tech. We've got areas like the government, the military making global changes, California outlawing diesel generators, and the rest of the country's right behind it. Things like the Street Project in New York, where they're taking 11,000 generators out. So this is your moment. So we're excited to hear what you're all about.
Wonderful. Let me just say a few words about myself, and then I'm going to go to the audience and ask a few questions there. My name is Arman Pahlavan. I'm a partner here at Perkins Coie. We have approximately 1,200 lawyers in 20 offices. My practice is in the emerging companies and venture capital. I do the formation of the funds for the venture capital funds. I do their transactions. I represent their portfolios. We do their exits. We take them public in various exchanges. A couple of years ago, I did one of the highest value public offerings on the London Stock Exchange of a U.S. company. We sell them at large prices and small prices. So if you have any questions about any part of the life cycle of a company, please feel free to call me or come over. I'm always available to meet with entrepreneurs. All of you, so I had a couple of questions to start this with. So how many of you are entrepreneurs or about to launch a company? That's quite a few. That's about a third, it looks like. That's wonderful. And how many of you are investors or angel investors? Right. Great. On the investment side, I just want to reiterate, you are all the beat and the heart of this entire valley and what goes on. I mean, the seed investments is the most important part of the investment cycle, and if people can't get seed investment, they don't go very far. So keep doing it. Academicians. Any academics? Journalists? Yeah. So we're getting fewer in number. So this gives me an idea of demographics. This is actually important for Rob and the way he runs the data on some of these attendances. But let's go to the meat of the discussion. So Zoe, why don't we start with you? Now,
Okay.
one of the things I was going to just suggest to you guys, there's this concept of ESG, which is environmental, social impact, and governance, right? But within that concept is the concept of diversity and inclusion is included as part of this. You notice there's 5 people on the panel. We have 1 English-speaking fellow, and that's it. And all of us come from a different place. What a great panel.
You know what?
Am I the English speaker?
I don't think so. You told me you're Ukrainian, so you're out. Anyway, so let me ask you guys. Zoe, why don't you start? But I want to get the panel discussion going and bring it down to earth. Give me 2 or 3 companies, if you have it, of your portfolio that are doing climate tech. Let's stage the discussion with what is climate tech, right?
Okay, well, I mean, all of them are climate tech.
I
So,
understand.
but we've done 6 so far. So
Do 2. Let's do 2
okay,
each.
all right.
Okay.
So we have, for example, we have REN Inc. So REN Energy. If they are decarbonizing supply chains, so they're basically working with companies like Target and Lululemon and Primark. To decarbonize their supply chains all the way to the factories. And the problem that you get is with these factories that they're auditing what they're actually doing and where they're getting their energy from is basically impossible. It's like a guy with a clipboard. The data is no good. By the time you get it, it's out of date anyway. And so REN is essentially taking all the friction out of having the good data. And then also when you have like a factory in Taipei or somewhere like Ho Chi Minh City, something like that, you might have a little bit of this factory's capacity and a little bit of this one there, and it doesn't really add up to enough to actually get a solar provider to come along and work with you. So REN does this thing very cleverly. They bundle it so that you can have all of you go in together and you end up with like 50 megawatts is actually enough to sort of have an actual additional put out of PPA and have actual additional solar power.
So
or
when
wind
you
power.
say they decarbonize, what does that mean?
A supply chain that was generating large amounts of carbon emissions will then be generating vastly fewer.
And how do they do that?
As described, they will help all of the energy that is used across that supply chain to be provided by renewable resources rather than to be carbon intense. Thank you.
Thank you.
Oh
Thank
my
you
God, I
so
should
much.
workshop this
Yeah,
elevator pitch.
it's interesting
Thank
because
you.
there's these
You're right. I got
words
too
that get
nitty-gritty.
thrown into the discussions, but to the audience, it's not quite clear. Even I
No,
practice
you're
in this space.
absolutely right. I'm too close to it. I can hear
You
I
know.
hear it now.
Tell us about the second company.
All right, I'll tell you about Phaedra. So Phaedra was created by some of the folks from Google's DeepMind, who are the ones that made Google's data centers run autonomously. So the data centers use the vast majority of the energy that a company like Google consumes, obviously. And they are trying to get them all to run on 24/7 green energy. And that means being able to shift like compute load around the place. So Phaedra basically founded by the people who started doing this for Google, and they're now, having left Google, are now doing working with companies like Merck. So they are helping, for example, a 500-acre site that has to stay in this very narrow temperature band. They're using AI to run the entire facility so that it uses vastly less energy. And it doesn't have these thermal excursions. It saves them a lot on their energy bill. It therefore reduces greatly the amount of emissions that each of these sites are producing. But if you're Merck, actually, the real win for you is that you don't have the thermal excursions, so you don't lose millions and millions of dollars worth of vaccines or drugs every time they go outside of this temperature band. So it's one of those nice things where it's greatly reducing the energy. It's very, very good in terms of emissions, but it's also very, very good in terms of not losing stock.
But how do they do that? How do they actually reduce the energy?
They have
production?
they have algorithms that are just a lot better at adjusting how much energy they're using and when in different parts of the facility at different times of day and where they're sourcing it from, and they're just better at it than people are.
Fantastic. Thank you. Okay, Osama. I hope you guys don't mind my talking through these discussions with you. Okay, great.
Commercials for portfolio companies are great.
Okay. Osama, please tell us about 2 companies that that portrays what climate tech is.
Okay, sure. So one of them is here in the U.S., based in Arizona, called Persephone. So they do carbon accounting, and that really was very hot space about 2-3 years ago. Cooled off a little bit. It was different, macroeconomic situations. But I genuinely believe, just like financial accounting wasn't a thing 110 years ago or so, carbon accounting and emission accounting is going to be just as prevalent in every enterprise. And what they really do to help all sorts of enterprise and financial institutions in particular is they develop a very well kind of digital, cloud-based, data-driven, almost real-time aspect of where is your carbon ledger, just like your financial ledger. And through that, they get to scope 1, scope 2, and scope 3. And once you have those data done well, you really can then go after what decarbonization efforts you really need to go after and really go and do what you need to do. So we're very proud of them. They're doing great work. Another one
and
actually.
the decarbonization activities, that's similar to what Zoe was mentioning. Is that correct?
Well, from their perspective, they initially help with compliance, disclosure, and accounting, right? And from there, you can then go and work with the different companies and the different solutions and the different assets and the different activities and your different kind of subsidiaries to figure out where and how you really need to go after the emission targets.
And is that part of the governance now? I mean, is that the part of the
I hope so.
internal
Yeah,
control for larger
SEC
companies?
hopefully soon will release their ruling. I think by the end of the summer is believed to go after public companies. The European also are doing a lot of work there. Same in Asia, Singapore in particular. So there's a lot of standards coming out. It's a soup of letters to determine what are the standards and all of that good stuff. But I think at the end of the day, no matter what your enterprise is, every single company, every single human activities will start measuring their carbon impact.
Yep.
And sooner or later, just like accounting has KPMG and all of those big four, but also, what is it called? QuickBooks and Intuit and TurboTax.
Right.
Different companies will have different solutions, but I think measuring your emissions as you do your business activity is going to be a big, big market, and we should all go for it.
Great. And by the way, go
Quickly
ahead.
define scope 1, 2, and 3. Just
Yes, please do. Please do.
So scope 1, 2, and 3 emissions. This is important jargon just because not everybody knows it. So let's say I light a bonfire, I'm burning carbon, that's scope 1. I turn on a light, somebody else lights a bonfire or, burns some coal or whatever, that's scope 2 because they're then sending that energy to me. Scope 3 is everything else. So it's like the truck that brought the coal to the coal plant and the mine where they dug up the coal, etc.
And in most
Great.
large, kind of medium size, it's mostly scope 3 that is very difficult to measure,
Yeah.
very difficult to go after, very difficult to
And also,
monetize.
this is by
and
far the biggest piece of the pie generally as well.
because it's very much distributed across, right? So a lot of,
Understood.
for example, all the big tech companies here, they really did a great job on their scope 2 emissions. The source of renewable electricity, they really tried to reduce their energy efficiency and all of that good stuff. But if they want to measure their scope 3 and all that goes into making the parts and the components and how we all use their product, it's a very different proposition, and it's very difficult to measure and actually address. But Persephone tries to help that in
Great.
different ways.
Okay, so that was, and I love the names of these companies. Phaedra, right? The student of Socrates, right?
Yeah, and
then we have
Persephone
Persephone's.
yeah, she's
Go-
the
go
wife
get-
of Hades, the Lord of Death. Yeah, so yeah, so it's
Going to the
it's a
land
bit
under.
macabre name, but
Yeah.
she tells you what to do.
Great. And the second company you were going to talk about.
Sure, another company that we actually invested out of the Paris office. It's called Carbonate, and they do point source carbon capture
Great.
for cement. So again, like I said, EDF. If you think of EDF as an organization, our scope 2 emissions are scope 1 and scope 2 are actually very low. So we're very clean in that perspective. So from the CVC activities we do, it's actually in the bylaws of the company. And kind of newsflash, the French state actually acquired EDF in the beginning of the year because they want to build 8 nuclear plants as France really doubled down on nuclear. So from the CVC perspective, we really try to help our customers to decarbonize a lot more than our activities decarbonize. And one of the activities that we really found was compelling was point source carbon capture for some of the cement factories that really can reduce kind of their emission on site. So they do great work, but they're early. And but yeah, we're very happy about what they're doing.
Great. And you guys know what a CVC is. CVC is corporate
Corporate
venture
venture
capital,
capital.
right? So that's a very large part of climate tech because a lot of these projects get larger in scale, and it will be beyond just venture capital to put money in. So you need bigger pockets to be putting money in at larger dollar amounts. So in some ways, they're part of the ecosystem for making sure that this climate tech scenario also works. Wonderful. And we'll come back to EDF and also to investing in Europe, because I think that's very interesting and it's much outside of the everyday parlance of what we do in Silicon Valley. Camila, please.
So actually, to your point, my first company is a Swedish company called Modbion that produces and developed a technology of creating windmills made out of timber. And the reason for this is because right now the windmills for creation of energy need to be as high as possible. With climate change and with the change of winds, we need to make the higher the tower, the better the power. So in order to do this, a lot of companies were using steel or are still using steel. And this is not a very sustainable material, especially not very good to transport. So when you do it with timber, you can do it in a modular way, sort of like, which is a little bit ironic, but IKEA way. They come from Sweden, so that's good. So they built the highest towers that man can build, and they made it out of wood. And that's my first company, and that's my golden child. I love what they do. My second company is a Chilean company called Strong by Form, which is also in the timber industry. And what they do is they developed a technology, a robotics technology, in order to optimize design of construction. So, you know, the CLT pallets that we all have in American houses. What they do is to use less material and less trees to be cut. They generate a geometrical figure on each pallet, depending on the design of the house, to be more structurally optimized. And this entails that we use less resources, and it also looks cooler. So it's also a great company. And to your point, I believe the question was like, oh, what is climate tech? And I wanted to touch base on that because I believe from my short experience that climate tech technologies and companies, the best ones are the ones that do not have the sole purpose of helping climate change or being a climate tech company overall, but the ones that as a consequence interfere in the climate change and interfere in sustainability and create sustainable processes and are consistent on their sustainability approach.
Yeah,
So-
I believe in it. That's a great segue to much of the stuff that Ephraim's going to talk about. But it's true. It's not all about carbon counting, right?
Exactly.
So
Yeah.
that's, I think,
It is a
the-
great technology, but yeah.
Yeah, which is perfect because that's a good segue into what I was going to talk about, which is kind of the broad breadth of climate tech. And I'm going to tell you about two companies here. The first one sounds very non-climate tech at all. This company is called Myco Technology. The reason I'm bringing it up is because they were formed by a bunch of founders that we invested in the AI space and got an exit in 2004. And those founders wanted to go ahead and do climate tech. So they founded a company called SolarX. We were their lead investor, high flyer back in the 2000s, and they were crushed when the financial markets imploded in 2008. They had $220 million in solar projects, and 24 hours later they didn't. And that team went off, and they licked their wounds. They did a couple of other things. But more importantly, they came back around, and they attacked one of the arguably biggest problems in climate tech, which is protein. And if some people may be familiar with it, but cows and protein creation or growing in the world is one of the number one problems in climate tech. More so, and one of the problems that can be more easily attacked than just about everything else in there. So Myco goes ahead and uses mycelia, which is actually mushroom technology, in a fermentation environment to create alternative protein at a 1.1 to 1.1 to 1 output ratio. So to give you an idea, a cow, taking it through its life cycle, getting it into the point where you can eat, is 40 times per gram the amount of pollution and climate, and that means water, that means methane, that means food sources, everything else. Where when you look at it in a fermentation environment, it's producing 1.1 input to 1 output. So that is incredibly friendly. It's an alt protein that is amino acid based because mushrooms are like that, which is it's not a plant-based protein, because when you hear about pea or other soybean-based proteins, you're just for kicking the can down the road, because all of that protein is still somewhere in the 5 to 1 output, 10 to 1 output, because they're plants, right? This company's now even gone further and gone into a place like the Persian Gulf and is using waste streams for dates to create protein. If you think about it, the Gulf does two things. They make dates and they make oil. So they didn't have any protein, and they had a real problem during COVID, and were flying cows in on 747s. So for them, this is a food security issue, but more importantly, it's creating protein streams out of waste streams. So that's really interesting, because when you look at it, I think we're knocking off 3% of power usage in a lot of categories. These guys are knocking out tons, metric tons of alternative proteins, which is taking other meat-based products out of the supply chain and making a tremendous difference to the climate. So that's one of the things we do a lot in the food and agriculture space. We did that when we talked about the little collapse of clean tech. we went off into that category where we felt we could make a difference without really telling anyone. And it was much more effective, to be honest. Now I'll tell you about one that's like right over the target of what we're talking about here. We have a company called Jewel Case. These guys are the hottest folks in the portable energy space. What they've done, this is their second time around. These are founders like yourselves that went out, built a company, got crushed, came back around, and spent a number of years. That's why the patent council that's here is really important for everybody, filing patents in the battery space. They actually have a patent and have separated the power from the energy. So when I talk about batteries, what I'm talking about is portable energy. So if you think about it, they've got brains, which are, if you want to think about it, boxes like that have all the inputs and outputs and intelligence and management systems. And then you can essentially plug batteries into them, regardless of type. They're what they call chemistry agnostic. And it can be different types, different chemistries, different ages, different use cases, different power levels, and power things continuously. And so this is a company that is very smart. They are veterans of the space. They've actually only raised $6 million in venture capital to date. Their current run rate is $4 million of revenue. They got a call a couple months ago from the U.S. military because there's this little problem going on in Ukraine right now you might have heard about. And all of our defense contractors are trying to knit together a bunch of Soviet-era technology with a bunch of really high-tech Western technology. So they're creating a mesh network. So they called them up and they said, well, we've got this Russian radar truck that looks like something out of Mad Max that pulls around this giant diesel generator, which if you think about it, it's not a good thing to remain very quiet with a giant diesel generator, right? They turn that thing on and somehow they just keep getting blown up, right? So they said, we need some batteries. Can you guys all show up at White Sands Missile Range in like a week? And they're like, okay, these are we're clean tech guys. We don't know anything. They're from Seattle, So they show up there with this crazy Mad Max truck. And they're with their battery. They come over and there's this weird connector. They plug it in. We do it. A 3-star Ukrainian general looks at it, comes up with this little meter and says, this will survive Russian attack. They placed a giant order. So, our clean tech guys are, military industrial too. So this company is involved in the street vendor project in New York City. I don't know if you guys are familiar with that. There are 11,000 street vendors in New York with little 3-kilowatt diesel generators sitting next to them. They are polluting the heck out of the city. They put out more fumes than the entire rest of the city. These poor people oftentimes are immigrants, and this is their first job in the U.S. They're standing next to an output with no catalytic converter, with no other form, just raw, fumes coming out all day long. So our company, for example, Jewel Case, is providing small 3-kilowatt, 6-kilowatt systems to replace that. And then the coolest part is, I don't know if you guys have heard of Scream Truck, the first ice cream trucks, venture-funded ice cream truck company. And some of you might remember ice cream trucks, little ding, 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 ding. Well, there's a cool one coming called Scream Truck, and they actually power it not with generators, but with Jewel Case batteries. So that is right over the target. This is straight energy, mobile power, power in the world, and then you've got something which is getting rid of cows. So, and the cow thing is pretty important.
That's great. So, and I thought it would be fun to kind of talk about climate tech in context of real examples. Now, since you were the last person that I asked questions from, Ephraim, is the business model for these climate tech companies different from the from the enterprise companies or from the software companies? Because here we have the SaaS modeling getting the highest multiplier on revenues, and the way it works, it just keeps the engagement of the customer with the company, so and then it will hockey stick, and then you can take it public. Right. Do you have the same business models as the sticky way of growing these companies and taking them to exit?
And that's a good point. Yeah, and I think this is really important to all the entrepreneurs out there, because I think one of the things we learned with the collapse of the first wave of clean tech is that the finance-driven 10-year payback models don't work. It doesn't work for venture. Yeah, for climate tech. Well, really for anything. I mean, really for venture is the critical path, because our return structure requires a much shorter cycle than the cycles that these companies could grow at. So, one of the things that we've done is taken a page, and Jewel Case is a great example, is we're using something called hardware as a service, HaaS, right? Which was developed, with the rings and everything else out there, which is the ability to self-finance it, make sure you have enough margin out there, but then reduce the adoption cycle by lowering the initial entry cost. So what you've seen now with solar's on the roof, $300 a month, we're able to do that at an enterprise level with mobile power. So you're able to, and they actually provide, for example, mobile vehicle charging. So you've got car dealers that can't get power into their dealerships to charge all these new electric vehicles. So they're coming to us and they're saying, we're offering them $10,000 a month. You're getting this, level 3 charging battery system. They can charge it at night. They can power cars all day. But if we went to them and said, $300,000, the adoption curve would be this. You go to them and say, hey, it's going to be like $10,000 a month. And they're like, oh, okay, we can do that. And then you essentially change the trajectory of a company's like that adoption curve. The great part in certain categories, because they play in the diesel generator arena, that adoption curve is pushing them. So they don't outwardly market; they're just fielding incoming calls. The construction interest, and that's a big important part. Construction industry itself is a huge consumer of diesel energy. It's one of the biggest polluters out there. The big rental companies like a United Rentals does $4 billion a year in generator business. Right. State of California is outlawing it. So think about it. Every time you drive by a construction site, someone's going to have to figure out how to power that. And that's a huge opportunity. And you're not going to do it if you walk up to those construction folks and say, oh, it's $100,000. They're never going to do it. They'd rather shut down. But if you go up and you say it's $3,000 a month, they can do it.
Right.
So changing the model.
Thank you. And Camila, I wanted to take this a step further. So what Rob was saying, and I know you have different companies than obviously Rob has, the model that he's talking about is a model that requires some financing of the hardware, whether it's it's a $300,000 piece of equipment nonetheless. So someone's going to pay that up in order for this to right.
Gotta have margin.
Right. But at least it does take an outlay of cash. So are you finding Camila, you can pick up the discussion. Are you finding financing companies that are willing, ready, and able to do these kinds of things? Is the climate tech world become savvy enough to have the financing arm of venture debt and non-venture financing entities that are willing to enter this market and partner with you?
I mean, they have to. So I think companies have to get creative. And as we were talking about examples, I can give you one from Europe. And let me tell you this as a background context, Europe is very bureaucratic about these things. So it takes more pace and time in order to enable this type of new technologies and creative business models. But for instance, material packaging is also a big market in the climate tech industry and is also high capex. So we rely a lot on the start of the company to create the machinery, to have the materials, and it's very high-end capex. However, what a company called Resemo did and what we were advised, or we advised them with other co-investors to do, was since they already had interest from potential clients, and this is the difference between software sometimes and hardware. Usually the companies that hardware attacks, or like this type of high capex companies, are huge for corporations. So they usually have big accounts. So we're not talking about that they have the capability to even tackle more than 2 clients at the beginning. So what we advised, together with the co-investors, was that they would suggest the first client if they wanted to pay actually the big machinery, sort of like a license to use it. And then that the company could get it when it was already on its top and it was already profitable, could get it back. And that's what happened. I mean, they got creative in it. They, at the beginning, the clients financed the machinery because they had no other kind of option. There was no other option in the market, which it was a blue ocean. But they got creative, and at the end of the day, they did what they had to do. So I think it is possible, just have to get creative.
Right. Wonderful. Because, this is becoming more difficult here, at least for the moment. with the collapse of Silicon Valley Bank and, the other banks have become more shy. Obviously, we've had these issues about First Republic and many other things. So the people are being more shy. So it's not clear how the financing arms will shake up. I called a friend of mine at Hercules, and he said that their CFO had left just recently in order to launch another, debt financing company for these kinds of projects. Go ahead, Ephraim, you had something to say.
Yeah, I mean, so the insurance category is deploying a lot of capital. So Aon, for example, a lot of the other insurance players are putting a lot of capital out in terms of what we think of as venture debt. In their case, it's equipment finance. So,
Right.
It just is a matter of what your cap rate is at this point. And since in most cases it gets passed along to the customer, it seems to be okay at this point.
But that's interesting. You said Aon is actually
Aon, yeah.
putting debt financing
Yep,
up for
yeah.
companies,
Yeah,
probably
yeah,
for
insurance.
larger companies that can actually
no, even
afford.
Jewel case.
Yeah,
Yeah, little company.
which is a little company. Interesting. So what a great thing. Go ahead, please.
I think a lot of these companies, there's a lot of companies like Google and Microsoft, Amazon, who've made these big commitments. If you get one of those to come along as your first big credit-worthy customer,
Right.
it can completely change the conversation. And then there's also the IRA with a lot of tailwinds, whether you get we have a company, Harvest Thermal, who works with your heat pump to turn your water tank into a battery, and that's the kind of thing where once you stack all those incentives, then suddenly it actually becomes very affordable because the payback period, you're like, oh, well, it's going to cost me X $1,000, but I'm going to get this much off my bill every month. Suddenly it's a much more appealing thing, and there's quite a large percentage of people who can actually afford that.
Right.
But there's also the fact that if your boiler breaks or your car breaks, you need to buy something. And so if there's a lot of stuff where X% a year of these things are going to turn over anyway, and if you've got a product that happens to be green and is as good, there's changes going to happen. But I think to what Ephraim was saying earlier, these software hockey stick companies, that's one way to, obviously that'd be lovely if we could get on a really steep hockey stick. But sometimes there's something to be said for the fact that if there's X million houses in America and this many of them get a new roof every year, there's a market. And it's just if you change over 3% of it every year, we will eventually decarbonize and make the retrofit the whole lot.
Great. So, Osama, go ahead. Yeah. You had something to say?
No, I like the company Harvest Thermal quite a lot.
They're wonderful. They're
great.
founded by this wonderful mad scientist, Jane. She's just
great.
brilliant. And she's like one of those a superhero origin story.
Yep.
Zoe, I hope everybody else understands what you're saying because I'm missing all of it.
I'm so
Just your lovely English accents.
Oh my God! I'm saying Jane Mellier, the founder of Harvest Thermal, is a wonderful genius and is a
great.
superhero origin story. That's what I said.
Wonderful.
I concur.
Sounds good. Osama, I want to hear more about what EDF is and what EDF is doing, especially in context of, developing and undeveloped countries, which really is an interesting sector. You may be in it or not, but certainly,
developing countries.
yes.
So, so again, EDF is Electricité de France. So most of our operations are in France, UK, Italy, and Belgium. There is
Okay.
a couple of business units that do operate in Africa, and there are French territories which considered Saint Martin and other places like that. But most of our activity are in the developed world.
And you produce nuclear plants.
Yeah. So the history of that, so it used to be, and currently is, the French electric utilities. So the generation assets are mostly nuclear and hydro and renewables from the electricity side. There's gas. There's another company used to be called Gas de France. Now it's called Engie. So they do the gas thermal activity. But in addition to generation, there is transmission and distribution, there is renewable, there is services, there is a big business unit that does all things related to built environment, waste to energy, heating districts, cooling districts, so a lot of different things. But again, concentrated mostly in France, UK, Italy, and Belgium.
And then you guys have operations here in the U.S., and that's
Right.
why you're here,
Yeah.
obviously.
Yes and no. So we do have operations here in the U.S. The biggest one by far is EDF Renewables. They're based out of San Diego. They are a utility scale developer. I think they're second or third in terms of gigawatts under management. And then we do have another subsidiary out of Houston that does energy trading. So those are the primary two business activities here in the U.S. So we don't have any utility customers. We don't have any retail activities. Mostly development of renewable assets and then energy trading here in the U.S. I am here, however, though, because of the kind of innovation and investment activity, trying to bring some of the innovation from here into our activities back into Europe. So when we look for synergies, actually, most of the synergies I try to find is with our businesses in Europe. which pushes us towards the Series A, B, maybe late B, in a sense that the company is ready to actually operate outside of the U.S. and willing to do that as well. Yeah.
You're investing and you're seeing, technology development and climate tech in Europe. Forget about the rest of it, right? And certainly you're seeing it also in the U.S. Is there a distinction? Is there? What is the difference?
There is absolutely a lot of difference. So before ADF, I was at Siemens, the German company, and before that I was at Chevron doing venture as well across. So I've seen different.
And where in Siemens were you? Which country?
I was also based here.
Here,
but working a lot with the Munich team. Okay. Yeah, I would say the European climate tech ecosystem is different in many ways. It is very bureaucratic. It is very regulation heavy. However, the individual personality around what it means and the decision driven is maybe a lot more progressive than here. They do rely on the government rules a lot, but they all seem to have a different, I would say, willingness to act. Like they do things because it's good for the environment more than we would here in the U.S. would say we do things because they're good for the environment.
We do it because of commercial gain.
Absolutely.
That's what you're.
Because of rugged individualism.
Yeah, rugged individualism.
I think also in Europe the debate is just over. Like the most fanatical conservative in the UK, I mean, is still pretty mild by American standards, but that just you don't have to convince people that the problem exists and that this is the right thing to do, which is quite refreshing. So you don't necessarily need the environmental, the financial incentive because they've already been sold on the fact that the problem is real.
And from the startup side, there is a distinction as well in terms of mentality and. The European market, as big as it is very fragmented, and startups there are a lot more driven by profitability than growth. At least, the sentiment here has changed a little bit towards kind of raining down a little bit of the high rocket ships.
And that's
ideas.
partly because of the availability of capital here, right? Because capital is plentiful available here, so you don't have to worry about profitability.
And the U.S. is a big market, and it's a
growth.
very easy to access market. So it's a much bigger market to access across states than it is between Italy, Belgium, France, and the UK. I can tell you that.
And they speak something like English in all of those places.
And somewhat same language. I mean, different states have different rules and regulation, as we all know, but it's very much different in Europe. And I would say also the founder mentality there is very, I would say more narrowed towards profitability, sustainability, longevity than excessive growth.
Also, because in the American culture, one thing I love, and part of the reason I'm here, Ephraim, I see you, is that there's a willingness to fail here. And so you can pursue growth and just, like, if I were to sit here and tell you about all the terrible failures that I've had in my life, like, people in this room wouldn't think less of me. And that's not really the case where I'm from, so.
Yeah, and I thought that was a good segue to kind of, like, impart a little kind of thoughts from us on entrepreneurs out there that are going about starting startups right now in this particular category. I think there's a number of things that you want to think about as an entrepreneur approaching us on the venture investor side, et cetera. Which first there's like kind of a big sort of binary bucket that your company may fall into, which is ESG versus really commercial play. And I think it's really important because ESG can be commercial, but in a lot of cases it ends up not being, a traditional commercial kind of play. And that's very important because for example, we don't invest from an ESG perspective. We invest from an exit perspective, right? So approaching us, if you're an ESG, oftentimes the CVCs are going to be in the same boat as ourselves. That's very helpful where you cast yourself. The next thing is, the sort of patience for very long cycles to revenue, for very long cycles to commercialization, for very long cycles to partnerships, revenue, and so on, I think it is really sort of a guiding principle of this current wave, which is you can get out, you can generate revenue quickly, you can get into markets quickly, you can have real customers quickly. This is, a non-research driven model today in climate tech. I think that was a big difference between, climate tech 1.0 and 2.0. We're here now. So when you hear my colleagues talking about some of their companies, these are all companies that are in the flow of things today. So being able to, slim down your idea, optimize your idea to be able to be commercial, to be able to generate revenue. Now, if you're a material science company that's going to change the world in 20 years, that's great. But your bucket of investors are very different. There are a lot of clean tech investors today that want to be able to get out there, make a difference. And, the adoption curve, your adoption cycle, time to market, those should be your top of mind models. And if you can nip and tuck your ideas, if you can find a way to get into market and be successful and build your business, there's a reason why half of Google software is still called beta. You know, if you think about the initial wave of Gmail, its feature set versus today, you know, this is what people in software and other aspects of the Valley learn very quickly. Get the product out there, get feedback, get developers on there, get partners, get customers, right? Whether they're paying you or not. Learn what people want and build it there. Whereas we've seen in clean tech, people sort of envision their world, and it takes forever to get it out the door. So take a page from some of the successful categories in the Valley. Get your beta product out there and you know, really drive it from there. So
sorry. To yes-and that a bit, partly it's that we don't have 30 years to solve this. We're going to win or lose this fight fundamentally in the next 15 years. So don't bring me something that's going to be amazing in 8 to 10 years from now. And the other thing is also there are election cycles, and we need to know that you're not going to have if something like, God forbid, the IRA gets overturned in 3 years from now, I need to know that your company is going to be resilient enough before that happens, that it's going to survive multiple cycles. So yeah, don't let the perfect be the enemy of the good.
Camila, go ahead. You've been wanting to say.
Yes, I just wanted to add something to the conversation, and also kind of like a suggestion I would see in climate tech. There's a lot of scientist background founders, which is amazing. But I would suggest, like, you always from the beginning should partner with a business person, because a lot of mistakes that I have seen is that, of course, these people that want to perfectionate these technologies and so on are usually the scientists. The business people, they just want to get it out there. So I would suggest it's amazing when you see teams in climate tech that can collaborate each other from 2 completely different perspectives. That's, I think, a good way to balance it out.
Go ahead, Osama.
Yeah, and again, I said I worked at Chevron for a long time. I worked at Siemens. Now I'm EDF. I see the tension of wanting great success quickly, MVP, quick iteration. But if you are a project-based company and not a product-based company, you got to be honest about that very early on. If your product is a project, it is not going to fit a lot of what Ephraim wants you to do. And just be honest about that. Find your right investor, find your right partner, because that's not going to work. However, all the good things that's been happening, and unfortunately, you don't need to boil the ocean. It's already boiling. So there is, just go out there and don't try to reinvent everything all the time. There are sources of funding. There are other capital stack people now that really get the sense of what project financing. You don't have to raise equity to build the factory that make the product. Just be willing, go after non-dilutive funding. I think that the example you gave about partnering with your first customer, that is great. And a lot of that could really be replicated, because if you find that first customer and you're willing to work with them and not just protect it, because we've seen a lot of really good ideas that believe that in 20 years they will take over the world, and they're very protective and not letting go of it in the sense that not getting the product out there. Please don't do that.
So I'm going to move on to a separate topic. We have only 3 minutes, and I know Rob is going to come here with his placard saying 2 minutes, even though we may have 3. So, question for you. Ocean. Right? Fabulous stuff is going on. Benioff is throwing all sorts of cash into it. Lots of other people are looking at it. Give me a blip about what your thoughts are about the ocean as part of any of you. Yes.
So 2 things that relate to the ocean that I have been, fortunately, learning a lot from founders on. One is, again, ocean as a carbon sink. So there's a lot of technologies trying to use the acidity, balance the acidity and the alkalinity of the ocean to really allow the ocean to absorb a lot more carbon, which will then reduce the acidity and help with the corals and all of that good stuff. Also, as offshore wind is becoming more and more a great resource for energy, floating offshore wind is becoming something as well. Coming from oil and gas, they've had floating offshore platforms for a while. There's a bunch of technologies for down-sea visualization, down-sea analysis, monitoring, and a lot of different things to really kind of utilize that offshore activity. So those are the 2 areas that I've really been involved with in the ocean.
I'm very interested in that. There's a statistic that really stuck with me, is that 95% of the plastic that ends up in the ocean comes from 10 rivers, and 8 of them are in China and India, like that, in that region, and I think the other 2 are in Africa. And that is happening because of poverty in those countries and places where they don't have good regulation and good governance. So I'd be very interested in stuff that you can protect the ocean. You don't have to be necessarily like in the ocean to be protecting it. If you're working on things like packaging and waste and runoff, industrial runoff, then you are also an ocean company.
Camila.
So I'm not very knowledgeable in the ocean topic. However, I've seen quite a lot of companies in the energy sector that, as you mentioned, are capitalizing from offshore wind. So a company is called Novi Ocean, which I think they have a great business model. And yeah, I mean, everything that is infrastructure for energy is a good business models at the moment, especially in Europe, as we know.
Great.
Yeah, I mean, I think we view the ocean aspect as more of an ESG play right now. I mean, it's certainly something that global corporations and so on, but I think, thinking about it, we're financial investors. We've got short rates of return. If we list or drift too much into the ocean, so to speak,
Too much
you
capital.
can have some troubles.
Too much capex.
Yeah, we got a day job too here, everyone, right? You do your day job, we do our day job, we give you money, you make us rich, we're all good. You're even richer than us. Think about it that way, right?
And the last question, oil. Right. So I heard something very fascinating today. Apparently, Stanford University, and see, I told them. There you go. He's coming. Stanford University. I told everybody you're going to be coming out soon. Stanford University has teamed up with Aramco, and has come up with a massive map of the carbon emissions of every oil well in the world. Right. It's phenomenal, right? I mean, so it takes efforts like this in order to really, bring home what is going on and how we're all in some ways suffering. Our Earth is suffering, and we're prospering. There you go. We delivered to you at 8:00, Rob. So,
All right.
The podium is all yours.
So let's give it up for our panel. So now it's time for audience participation. So if you have a question for the panel. Oh, by the way, I forgot to mention you guys exceeded expectations. That was beyond brilliant, compelling, dynamic, entertaining, and scintillating. And you did not exceed the time limit. We'll have formula line here. This is not a pitch event, so do not deliver a pitch or a thinly disguised pitch. If you do, you'll have to deal with Joe, our bouncer. So you've been forewarned. So first question, step right up to the mic.
First of all, thank you so much. It was very enlightening, and I truly appreciate that we finally enter in the era when we realize that we are living in the planet and not on the planet. We share those bodies with the planet. We're borrowing them, really, right? So I've been in the space for a while, actually, and when I came to Sustainable MBA in 2006, I thought that everybody is there because they love nature and they just feel this intrinsic connection with nature, and that's why everybody's involved in tech and business, etc. I realized that it's not the case necessarily. What I'm curious about, I do know a lot about carbon calculations, and I feel like it's only the first step. It's really a rudimentary step, honestly, on this path to sustainability. Are there any efforts to account for ecosystem restoration, for ecosystem valuation? Because ecosystems obviously produce a lot of different services to us that we are a lot of times devaluing. So
nature as a service. It's we can make anything sound awful and corporate
if
we try hard. Yes, absolutely. Carbon insetting, as it's sometimes known, reforestation or protecting the trees that we have. I just spoke to a company recently who are paying smallholder farmers to keep carbon in the ground. They measure how much they've got and then pay them, which is obviously great because a lot of them are going out of business otherwise. Nature-based solutions, they often get oversold, but personally I think a mangrove swamp maintains itself and gets stronger every year if it's protecting your city. A seawall has to be maintained and costs you more and more money every year. So I think, generally speaking, nature has a pretty good idea what it's doing, and cooperating with it is a smart move. But I think we are, as a society, very bad at valuing things that we haven't been able to measure, so measuring comes first.
I hope so. I think I've seen a bunch of activities like that. The issue for us to make it actionable, though, it's localized, and again, given where we are, it's always very difficult to validate the investment in something that will go in another country and things like that. But I do kind of subscribe to the same fact we We all live in planet, not on the planet. So I do think there's room for it. But if you, I mean, I've seen this in voluntary carbon markets and all the carbon credits. Pricing externalities is hard, and then monetizing it as a startup is also very difficult. So unfortunately, I feel like it still has a long way to go to become a product that people pay for, very clearly understand the service they get. It will continue, not that I like that, but I think it will continue being part of willingness, voluntary philanthropy and NGOs and things like that could really drive it. But that's kind of what I know of it as of now.
Exactly. I would like to add that as an investor, these technologies are not regulated. So let's say if a startup wants to work on reforestation, most of the times they would sell it to one client, right? There has been some use cases in which that hasn't happened, and there's no regulation or legislations put in place yet that oversee kind of like these procedures. So we also, for these type of technologies and for this type of business model, we're also depending on the legislations, and we're also depending on kind of like what do legislators in our communities do. So not to discourage anyone, of course, but we also need to wait a little bit in order to make these bold moves, but it's definitely coming. So yeah.
I think my colleagues have really covered it. I mean, we're financial investors. I think there's a ton of money out there to be funded from family offices and nonprofits to do, and better in those hands than trying to push it through the capitalistic system. I mean, we're all about cheap, fast. That's not a good thing for that.
Basically, we are doomed, right?
No, there's plenty of money. The more rich software entrepreneurs there are, the more family offices there are, the more money that goes into ESG and 501c3. So, it's a life cycle.
And also changes in like built environment technology, like changing, these endless sprawly suburbs into more climate friendly cities is incredibly good for nature. Like it's not a matter of having, as you say, we're part of it. So like we can bring nature into our cities, into our homes. And those technologies are going to also reinforce healthy ecosystems.
Thank you so much. And Rob, I forgot to thank you. He's out. But thank you, and thank you so much.
Of course, thank you very much.
So I'm wondering about how much of the success of Clean Tech 2 over Clean Tech 1 is due to new regulation, and where do I go to find out about new regulations that have been put in place that might help me decide what direction I should be pointing my technology arrows?
Well, I mean, there's the internet. I'd start there. and
then there's lawyers. You can go there.
I was about to tell you. I mean, we're in the house of the folks that have lobbying organizations and specialists.
That's
and
right.
I'm pretty sure Arman's partner over there can probably list 100 things in the first 30 seconds that could be very helpful.
Kevin Feldis is who you need to talk to probably, and among others. But I think the general issues about climate and environmental protections, and those have pretty much remained constant, Kevin. Am I correct? I mean, those things are still there, and they haven't changed that much. Maybe you have a perspective, Kevin, if you would like to share.
I think you're probably thinking about what's the SEC doing. We're all wondering that too. And as I think you said, we're expecting some climate disclosure regulations.
But that's for public companies.
Yeah. But it matters.
Well,
because
So at a high level, the Department of Energy has a bunch of daily newsletters that come out. They're covering regulations. They're covering programs that are out there. There's NREL based, which is another government org that puts out a lot of that data. California policy is it goes to the web faster than it goes any other place. So when I talk about diesel generators being outlawed and things like that, all of those programs, most of the big energy companies today have huge sections on their website. They're all trying to be good stewards, so they're going to give you a lot of that.
There's a great newsletter that's called CTVC, Climate Tech VC. They just go for it. It will give you a really nice primer about where the regulations are, especially the most recent ones. Subscribe to it. I think it's a great read, easy, every other week or so. So CTVC, I think it's a good way to do it. But what I would say is to answer your question, I wasn't in VC at Clean Tech 1.0. I was more on the development application side, so I was building solar plants and energy efficiency. Yep, that's it. I don't think the regulation really made the difference this time around. I think the reality is sinking in. There is cost of doing business now, no matter where you are, and it's very, again, I use the word macabre, but you can't really operate the way things are right now, and corporations are realizing that. All sorts of corporations are realizing that. So back to the very original question, what is climate tech? I think it's really encompassing almost every activity that businesses and human people do in search of economic prosperity, but you really need to do it in a much better way. Not because we care about the trees, but because there's not going to be enough customers that can come to your site if it's flooded every year.
I think also not all laws are national, and at the state and city and even like it's at the municipal level, a lot of the really good stuff and exciting stuff is happening there, partly because they're really low turnout elections, so like 3 really enthusiastic people can change the whole town. And I think if you are selling directly to the consumers, especially taking the friction out of understanding all of that, like if I live in Palo Alto, am I facing a different thing to put solar on my house than if I live in Santa Clara? Like, it's a big, horrible mess. You've correctly identified that like there isn't actually a really good place to go to find out immediately what makes all of that easy. So somebody should do something about that and start a business that solves it.
Or what's a good thing to do is start with incentives. And you can find that out there. There's a lot of dollars in the Infrastructure Act. There's a lot of dollars at state and federal levels that will fund things like that. So I'd encourage you to look at regulations, but also look at underwriting for different things, because that's a great way to know where there's going to be traction.
And just one thing to add, it's not only the IRA, so there's an Infrastructure Act also passed, and it's not just the DOE or the DOD. The funding is going to almost every agency out there. Like we're working a lot with climate risk and resilience, so we're talking to fire and flooding and a lot of those things. The Parks and Service is going to have a lot of grants and a lot of opportunities to do a lot of different things. So really start broadening where you go and ask where is the funding coming from, because it's quite dispersed. And
the sleeping giant that I think gives us a lot of momentum that's just woken up is the insurance industry. Like we saw today, State Farm pulled out of Florida. They like that. You can have elections go any way you want, but if you can't get a mortgage on a house because of climate change, then people are going to pay attention.
Hi, this is Rishikesh. I mentor a few startups that are in the climate tech space. My question is regarding to the semiconductor industry, the hardware you mentioned before in the data center. Reducing the energy during the operation is kind of not a big deal because it happens all the time. Every time a new processor comes, it's lower energy compared to the compute and all that. But the embedded carbon in the entire hardware stack is very huge. So are there any companies that are focusing on that? And I want to understand what is the incentive beyond the regulation for them to go low carbon in that area?
It's the right thing to do. If you're working on the sustainability team at a place like Google, where you've basically until recently been worried that your job would be cut in every downturn, then yeah, you're there because it's the right thing to do. So that's the incentive. It's also a lot of it is your future proofing. Because if you look at these big companies, they use huge amounts of steel and cement and things like that. The climate-friendly versions of these are often better. To Camilla's point about these timber frame houses that are designed, like they look cool, they're nicer and they're cheaper to run. So there's all these other upsides that you can find in different, finding better superior supply chains. And there's also all these. It reduces your exposure to like volatility and pricing of things like cement and steel and so on.
I would also like to add that another appealing aspect of climate tech or these technologies is that new generations are caring more and more about being part of the good guys. Like if you ask any of my friends and they offer them a job at an oil company, they would say no just because of embarrassment. So let's just say it is. I'm sorry. No,
Camila wasn't in Climate Tech 1 because she wasn't, in the workplace. Yeah, it's true. There's an organization called Climate Voice, which is mobilizing workers across tech to put pressure on their companies. And there is enormous success, like especially at Microsoft, where the employees are just saying, basically, we're not going to stay. And if you want to recruit the best talent and keep it, you have to act.
And in the semiconductor industry, you ask about which companies are doing this. This is not a company that is exactly doing this, but they're tackling the waste management of semiconductors. And that's a big market because that's the most carbon heavy aspect of the process. And what they do is they install the machinery and they develop the technology, a hardware technology, in order to avoid that. using a camera and different photovoltaic, I don't know how to say that. Yeah, sorry. So there's people doing this, and it's quite interesting, not only for because of the regulations, but because the companies that use these suppliers are demanding more sustainable processes, and that's the end of it.
I've seen the same thing. I wish there's a biodegradable server to be made at some point, but I don't know how to do that. But we've been working a lot actually with companies that are doing on the recycling aspect of not just power systems, but also minerals and batteries. And we don't do smelting here anymore, and neither does Europe. All of it is in China and Indonesia in particular. So finding different methods to offset that very carbon-intensive melting of metals to recycle it. There's a bunch of different technologies doing kind of electrochemistry in particular, doing really good work, not necessarily on sort of reducing kind of the life cycle. So maybe that's an area that would be very interesting to see. How can you read electronic waste? Just we've all seen those 60 Minutes documentaries, and it's terrible. But yeah, why would you do it? Because you can't keep wasting all of this material. It's actually like we are running into a material crunch, whether it's copper, lithium, rare earth. Like it's gonna eventually come back as a financial incentive as well.
Next person. Thank you. Thank you very much.
Thank you to this amazing panel, really helpful insights. I'm Bettina Grab. I co-run Alder & Co. We're a marketing agency that helps climate tech companies scale. Osama, you mentioned you look at Series A, Series B stage companies for expansion into Europe. So I'm really curious about the cross-Atlantic collaboration across the pond. And I'm curious to hear from the panel, what else other than funding stage do you look for to determine whether a company is ready to expand across the pond? Thank you.
And tell me again, what does your company do?
So we're a marketing agency. So we help climate tech companies with their branding, growth marketing, digital marketing,
Great.
social media.
And you're focused on climate tech?
Focused exclusively on climate tech, and we're also women and minority run.
Wonderful. Great. Okay. Who wants to take that?
I'll start from my side. It is a narrow Venn diagram to find entrepreneurs who can fit all the other criteria that the panelists here will suggest, that also want and willing and capable to work with our activities in Europe. So, we look for startups where if the entrepreneur or the solution, has the capacity or the ambition to do what we believe they will do great here, because that's their ambition starting with, but can also exist in Europe, especially France, UK, as I said before, then this is where we work with. And the way to make it easy for myself is if the customer exists here, and it's one of the multinational companies of the world, then it could exist there as well. So if it's a cement factory here, they have cement factories in Europe. If it's an auto factory here, they have auto factories in Italy. So we try to do that this way. But what that limits, to be quite honest, is anything related to utility activities. So a lot of the technologies around smart grid and how to manage the wires and transmission, it is very difficult to bring that over to France because they feel like they know everything. But we really look for...
Well said.
I mean, they run the whole country. Yeah. But again,
I think the Germans are similar like that.
Yeah, the Germans are good too. But we really look at the market. If it's the market, and a lot of the climate tech, it is a very global application. But if the customer set, the customer asset, the type of customer that the startup is working after exists in Europe, this is where we really look into. But yeah, we do like to see a product to just focus on the market side. So that's how we do that bridge. I'm also on the board of a couple of companies that we invested in Europe that they're trying to come here. And it's a very different conversation because, again, the market is massive, the competition is different, but there's a lot of capital. So it takes kind of the ability to switch hats a little bit and think, what do you need to be successful here versus there?
Yeah,
and I'll let the others
I'll add to that. I mean, we discourage our companies from going to Europe at all costs. I mean, if Europe comes and knocks on the door and demands to buy something, we may ship it there. But at the end of the day, unless it's software and it can be purchased online, we don't recommend it. However, to Osama's point, every European company should be trying to come here. We have one language. This is the global market. So, I mean, at the end of the day, I mean, I think the opportunity to get great companies out of Europe and into the U.S., similar to what we saw in Israel and how much that's blown up the ecosystem, is really key because they're great entrepreneurs that are starving all over Europe. There's no capital there. They're thinking, they're still like medieval thinking. The French think they're right. The Germans can't make a decision. The British are drunk. And the Italians have no economy.
That's true.
So, like, if you could sort that, just, bring over some good entrepreneurs. We'll take them.
Also-
we'll give them a draft pick.
There's also a question of, like, if you have an English-speaking team, maybe Ireland is your bridgehead because it's the English-speaking member of the EU. Maybe the UK is your bridgehead because they're desperate at the moment.
So let me ask you a question on this point.
Oh, but I have a good story. Can I tell it first?
Okay.
Okay, we had a company we spoke to who said that they'd lost a deal in Italy with a very major brand there that would have been like and they said it's because we didn't have a man in Milan, to which one of my partners immediately responded, I will go to Milan for as long as it takes to sort this out for you. So if it's a nice place to do business, that does matter.
So is it true that the entire market of Europe is not as large as the U.S. market?
Oh, yeah, it's a fraction. And not only that.
It's a fraction.
It's a fraction.
Are you
it's
serious?
segmented, right? Europe is really like three economies. There's the German-speaking economy, there's the English-speaking economy, and then there's like the whole Mediterranean. Don't know what they're doing.
I understand, but
no
in Romania they have roofs, so you can put a solar panel on there.
There's the beer, basically.
Yeah, but
there's
have
the beer
you seen
companies
what
and
like the exchange rate in Sofia is? It's like, yeah.
It is much smaller. Yeah, I would just, if I may, sorry. It is very fragmented.
It's fragmented.
It's very fragmented.
I get that
EDF
part, but it's not as big.
Well,
the total addressable, but the TAM in Europe.
And it's
but
aging.
Here's what I would say. I've worked on Chevron before. TAM doesn't mean anything to any startup.
It really depends on what you're talking about, and it's a bigger market. There's more people. And
we're going to have a
TAM is
conflict on the
bigger.
panel. That's
Yeah, I'm
fabulous.
going to disagree. I think that it is bigger, and yeah, but it depends what you're. Yes, exactly.
Yeah.
But basically, I see Europe as the beer section and the wine section is Europe, and you.
To be honest with you, as a startup, you should think about California, one of the world's largest economies, and if you can succeed here within 100 miles of here, then that's all that matters, honestly.
I disagree. I think that's not an ideal like that.
Ephraim, we have Europeans on our panel.
This
We're
is
going
what-
to lose
like-
this war.
This is why Americans claim they're Canadians when they're
throw
in
the
Europe.
grenade.
What I would add to you, though.
I agree with this lady.
in some areas in particular, so if you think about direct air capture, if you think about hydrogen, in some of this, like really, like if you even agriculture in a way, because agriculture is very different, and agriculture everywhere is different, but it's massive. These are, I think, the startups that are going to come from Europe to here.
Osama,
because
you
the
made a
regulation
really
and the
brilliant
power
point.
cost and the market cost, these are, so it depends on what you do as well. And I just meant it earlier, like working at Chevron before, TAM doesn't mean. Like,
I totally agree with you.
it's really the areas
Because
that
if
really
the
you can
TAM
work on.
is fragmented and you can never conquer it, then it doesn't mean
It's
anything.
really what you can work on.
Go ahead, please.
Just to add one more thing to the Europe versus U.S. Startup world in climate tech, there are a lot of pre-seed climate tech venture that in Europe now. So
Europe has been driving climate tech. We all looked away while Europe continued. There was enough done on a country by country and even nationalized basis there to actually keep climate tech alive. Honestly, we credit Europe for keeping this alive.
And
So you get the kudos. So the infomercial's over.
Yeah. And I'm seeing that now that actually various investors from different countries can go in and invest in one pre-seed company. So it is possible. But anyway, I just had a couple of, there's so many questions, but I have a couple, you can do just rapid fire answers. And what company do you think in the past have done the most for climate tech? What company do you think now is doing the most for climate tech? And what business model do you think is the one that's going to make the biggest impact going forward?
Okay. So, past.
And
Camila,
I have one more.
what company in the past?
Like a job interview.
One by one. What company in the past? Go ahead. Osama.
I'm gonna left field it. I'm gonna look at someone like Beyond Meat or Memphis Meats or culture-based meat companies are gonna probably move the needle, frankly, for climate tech more than just about anything that's been out there so far.
Okay, so that's for the past. Current, correct? Your second question was current.
Okay, but we can only ask one. I have three. So you said current companies, yeah.
So Beyond Meat is a passe, so that's past. Okay. So how about current in the new models? Camila.
I
Timber
honestly
sounds good.
believe I haven't seen one that is generating impact yet because of what we just said. Like, it's not a hockey stick type of thing. Software was in the business since the 90s. We're just starting with it. So we cannot assess the impact yet on the greatest one. But certainly, to your point, actually, I think Sweden is one of the pioneers on and can be birthing a lot of companies that have the greatest impact. But yeah, I couldn't assess.
Okay.
At the
I
moment.
reassess. I'm going to hate to say it. I'm going to say it. It's Tesla. No. Actually, I know I hate it. I can't do it. But no.
Is that more from a marketing
It
point
made
of
it
view or
sexy.
from an
No,
impact point of
they
view?
made you asked about making an impact.
Yeah.
And what they
But
what
where
they,
would Tesla be without Prius? So
Yeah, I don't disagree. I mean, I'm just saying if you're going to have that impact point, I mean,
Yeah.
that's it.
Yeah.
And it made it sexy and like appealing to be on the cool group of
It's like
climate
Apple
tech.
Computer.
Even
it's
if you forget the sexy part, they were the first mover on electrical vehicles, so they've commercialized.
well,
this
no, the
thing.
first electric car was built in the 1880s.
I understand.
I mean, what they were able to
Let's not
do
go
is
to
deliver a
Newton.
low-cost, high-impact vehicle. So it made a big difference. It made a very big difference.
We agree. I think that's right.
I was in a Lucid last night, and that's even cooler.
Yeah,
Anyway.
that's a question of sexy versus not sexy, right? But then that's it.
Well, I guess. I take what I get.
Next question. We have only a few minutes left. Go ahead. Thank you. Thank you very much.
Thank you, everyone. Very interesting panel. So, Corentin, founder of Orca. We help organizations create software 2 times faster. Yeah, no pitching. Okay. So, I have a question. 15, 20 years ago, we had like time to be proactive with climate change. Now we see climate change. Now we start to see a lot of solutions to fix the issue, but it's too late. I mean, it's important. And it's going to take time for for solutions eventually to make an impact. But it's not too late for climate adaptation because we don't see the full force of climate change. And do you see, as experts and people working in the field, do you see that being a topic and do you see interesting things? Because we still have time to be more proactive with that.
Yeah.
And
This is not a pass-fail. There is a huge spectrum of outcomes between total victory and the apocalypse. And at the moment we're heading for a sort of half-apocalypse, and our job is to get it to like the mini-apocalypse, because as you say, we probably can't have total victory. So yeah, adaptation is going to be incredibly important. A lot of those technologies just make life nicer anyway, because if you're doing things like urban tree cover, that's very nice. But also managing the risk of, things like State Farm pulls out of Florida. If you look at the average American house changes hands every 13 years at the moment. So if you add a 30-year mortgage on the top of that, you're looking at, there are houses going to be sold in this next sales cycle. Like right now, that need to worry about whether they're going to be in the sea or flooding every 5 minutes. 30 years from now, there's going to be a huge amount of money in managing that risk, trying to do managed retreat before the water is lapping at your door. And there's also going to be things like how to live in a place like Phoenix right now has been 110 degrees for 2 straight weeks. This is how do we make that kind of thing survivable? Is going to be very interesting. And so we have left it late enough that those technologies are going to be extremely lucrative, even though it's honestly really sad that that's true.
So we've been working on a climate risk and resiliency thesis for a year or a year and a half, and unfortunately we don't have a lot of investments to show for it because the French take their time. But I would say absolutely. I think it's absolutely important. I've believed that from the beginning, from modeling, forecasting tools, which is great, to risk assessment and like trying to turn that model into actionable decisions, and then lastly insurance and transfer the risk into financial hedging and risk, because we could go to net zero in the next 5 minutes, but the next 20, 30 years are still going to be very, very problematic. So whether it's fire, flooding, heat wave, cold wave, there's a lot of different aspects that you could do. For startups, though, what I can share with you quickly is that it is difficult to do physical mitigation via startup because it's site work. You're going to weatherize, you're going to insulate, you're going to lift the boiler up, you're going to do something, but that's not high margin J-curve type. Right. But parametric insurance might be the way to do it. Regular insurance, software, analytics is a lot way to go there. And I can name 5 companies that I would have liked to invest in before those big incumbents moved out of the market. But now we'll see what we can do.
Last question. Go ahead.
Hi, my name is Ryan. I know we're running out of time, so I'll make this quick. We briefly touched on the subject of Aramco partnering with Stanford earlier, and I was just wondering, since we conveniently have someone affiliated with Stanford today. I was wondering if you're able to share some insight on that subject.
So I'm just a lecturer over there, so I show up and speak, but no, I would leave it to other colleagues to speak to that.
But what was your question, actually? I didn't quite catch it.
I was just wondering if they're able to share some insight. I know it can be a contentious subject because, the Aramco, they're
Yeah,
affiliated with the
I don't know enough
Saudi
about
Arabian
it.
government.
Yeah, I don't know enough about it. It was a 2-year project, and it was done to really show what oil wells are doing in terms of climate, destruction. And it's interesting that Aramco was willing to do this because obviously they were probably trying to make a point for their own country, because the whole country is very cognizant that they have to move away from oil and just diversify into other economies. So I really think it was a project that was spearheaded by Aramco, and they found Stanford to kind of do the data sets for them. That's what I understood. But I can't share anything more than that because I just don't know, and I don't think anybody in the panel has heard about it. So
I mean, I think we can all wish the people of Saudi Arabia, very well in pivoting away from oil. I don't think the people of the Saudi government, I have many good wishes towards. But, so obviously we have to do business with people we may not be totally thrilled to be friends with to make this pivot happen. But, I'm not sure I'd want to be in business with Aramco.
And nothing more politic than an Englishman speaking, so we will end our conversation here tonight.
Sorry about that.
Good night and good luck. Thank you so much for participating in this wonderful program. And really appreciate your participation. Thank you so much. Thank you to the panel. You're amazing.
Thank you.
Applause. Let's give it up for Arman, our awesome moderator. Applause. Let's hear it for Perkins Coie and all our sponsors. Let's hear it for our event team and our video team.
Yes.
Let's hear it for Joe, our bouncer. Let's hear it for our audience. Let's hear it for me. So stick around, network, socialize, and connect as a courtesy to Perkins Coie. So I'll see you at the after party. Thanks for coming.